In this video, we'll dive into the world of high short interest stocks. These stocks often present unique opportunities for investors. And today we have 5 companies in focus: Enovix, Kohl's, RH, Williams Sonoma, and Wolfspeed. Stay tuned to discover potential short interest candidates and investment prospects. Let's dive in. Welcome back, everyone. Thank you so much for tuning in. Today, we're going to uncover 5 short squeeze candidates with catalysts for rebounds. So I can't wait to see what our 2 experts here have to say. Thomas, you had recently wrote an article for MarketBeat, and you had mentioned that looking at short sale lists is always interesting because there's usually as many names worth buying as there are selling. And MarketBeat's list of high short interest stocks is no different than usual here as we're recording in early November. We see many names are trending lower, but there's also a few potential candidates for short squeezes. So why don't you start us off here, Thomas? There's an intriguing mix of opportunities and risks, and our viewers want to hear about it. So what do you have to say about all of this?
Well, right. This list is a list of heavily shorted stocks, and I will not deny that these stocks haven't had reasons for the short sellers to get interested in them over the last few months or years, but they're all fundamentally sound businesses that have begun to show signs of bottoming and have catalysts on the horizon. At the very least, these stocks could see a short covering rally, if not a short squeeze, that leads into a complete market reversal. Now, the top of this list is Enovix. We've talked about them before. They are a leading player in silicon anode lithium-ion batteries. Silicon anodes are important and revolutionary because they have about 10 times the energy density. They have a higher discharge rate, and they charge more quickly, which makes them well suited for EVs and aerospace applications. Right now, Enovix is one of its biggest clients is the Army for its drones. Right now, the company is shifting its focus on the clients that it has and ramping production of those specialty batteries. I think that revenue is expected to ramp about 1,400% next year. Wow. That's not basis points, but percentage points, 1,400% next year, which will be a huge catalyst for this market.
That is wild. Chris, looking at these other stocks Thomas covered in the article, what kind of sticks out to you?
The stock that intrigued me the most was Wolfspeed. This is a semiconductor stock, and I know for a lot of people that when they think about semiconductor stocks right now, they're thinking about NVIDIA, and that there's good reasons for that. What I like about Wolfspeed, they're focusing on making silicon carbide chips. And these specific chips, SiC chips, are being used in electric vehicle and infrastructure applications. The reason why that's important for investors is that area is slightly less crowded than other areas like AI and gaming. So the reason why Wolfspeed's on a short sell list right now is because they actually make their own chips. They design them from scratch. So they're not in the market right now as heavily as somebody like On Semiconductor, which we've talked about before. But there is a good opportunity for this company. The market for these chips is growing. As the market grows, the margins for these chips will move higher, and Wolfspeed is growing revenue, and they're getting closer to profitability on the earnings schedule. It's an intriguing stock for me. I was interested to see that when Thomas had it on the list.
Yeah, I just want to point out too, the silicon carbide is important because these chips can operate at a higher power levels and higher heat levels, which makes them perfectly suited for industrial applications. And that's big for the IoT and the rise of AI and automation.
Wolfspeed's a new one for me, so thank you for including that one on this video. It's been kind of fun to learn about that and hear the insights from you guys, so thank you. Thomas had mentioned 3 retail stocks in this article: RH, Williams Sonoma, and Kohl's. Chris, do you lean towards any one of these retail stocks in particular?
As an investment right now, probably no. RH, which is formerly known as Restoration Hardware, and Williams Sonoma, they cater to one side of the market. Kohl's, as we know, caters to sort of a different end. If I were to look at one stock just as a stock to buy, I might be leaning towards Williams Sonoma. I think they're in that sweet spot of people who, at a time when they might not be selling their homes, Williams Sonoma kind of plays in that refresh as opposed to remodel area. But I know this is about short squeezes. And so as a short squeeze candidate, I can't help but look at Kohl's and look at that nearly 22% short interest. 6.1, I think, was the short ratio in terms of the days to cover. We all know that Kohl's is kind of a cult has sort of a cult following. And with the holiday season coming up, I think if they get any sort of a boost there, or they offer anything by way of their guidance that suggests they might have a stronger quarter than people expect, that would be a short squeeze candidate for me.
The Kohl's cash, that's what gets me with Kohl's.
Mhm.
Always
Right.
got me going back.
It's a real thing.
All right, Thomas, since this was your article, let's have you weigh in here. Tell us about this sector and maybe the trends that we're looking at.
Right. So RH, Williams-Sonoma, and Kohl's have a common thread within their respective retail sub-industries in that they're looking at some normalization and a return to growth. In the case of RH and Williams-Sonoma, these are home decor companies that have shown some resilience over the last year. They're also e-commerce plays. That's important because e-commerce is going to lead the broad retail sector by 3-1 this holiday season. It's looking at 15% growth compared to about 5% growth, and we're going to see wider margins. Analyst sentiment is still a little sour, but both stocks are showing a bottom in sentiment that I think could turn into a reversal with some solid reports. As far as Kohl's go, this is a turnaround story coupled with value and high yield. We have normalization and a return to growth expected, but the company's paying almost 10% in yield. Management is committed to paying it. Right now, earnings are sufficient to cover it, and there's wider margins and earnings growth in the forecast. So I think a solid report with a solid guidance could catalyze this market higher.
Well, thank you so much, everyone, for joining us in this exploration of high short interest stocks. We hope you found valuable insights into your potential investment opportunities. Remember, I have several resources linked for you down below to help you continue your research, make those informed decisions. If you did enjoy this video, please like and subscribe for more content like this. Happy investing, everyone. We'll see you next time.